The 18-day reversal cycle worked yet again. As you can see here, we did have a bottom form on Monday, which is the exact day that it hit. I shared in the Sunday video to look for some type of a reversal either Monday or Tuesday of this week because of this reversal date cycle. If you're unfamiliar with what the 18-day reversal cycle is, basically every single 18 days you're going to see some type of a reversal in the opposite direction that price is going into it. For example, if we just pick any random one over here, momentum was going down into it. So then on this exact day, we ended up having a reversal to the upside. Same thing would apply to any of these over here. It print a day early, but still there's about a plus or minus 1 day error on this. So 1 day before the actual bottom formed, followed by upside. So again, similar to this, either Monday or Tuesday of this week, we would have seen a reversal to the upside. In this case, it was the low from Monday, and we're currently in that reversal phase at the moment. Now, this reversal doesn't have to last until the next cycle. Typically, at least with this cycle, you'll see at least 3 days of a reversal. That tends to be the case in that direction. It could be way more. If you look back at previous ones, caught the exact high over here in August before a lot of downside afterwards. So it also can be very significant tops and bottoms. But in this case here, we're probably going to see at least 3 days, which means tomorrow would be the last day at a bare minimum. Again, it can continue after that if it chooses to. But regardless, this was a nice bounce here. And something else I want to talk about is on SPX's chart, specifically because on this reversal date, we actually broke out of this pattern, as you can see here on the 15-minute chart. So we had this downward wedge, this blue line here being the resistance, and the bottom blue line here being the support. We did break out of this the day following, and now we're consolidating up here around this minor supply zone that I have here in purple. Now, the key thing that I want to mention is these 3 green circles. These circles are where we've seen gaps in previous days, at least gap downs of the previous structure. And as of today, we actually filled 2 of these gaps, which is very critical and is going to have implications on the future price action of the S&P 500, specifically into July. Because whenever you see gap downs like this, especially multiple, in this case, it was 3 gap downs that were left unfilled to the downside. Whenever bulls get an opportunity to attempt to fill these gaps, depending on how many they fill, basically is an indicator of how much strength they have. In this case, already 2 days into the reversal, they've been able to fill not only the first one here, but also the second one. So it's going to be very critical to see if they can fill this last one before the end of the week. If they are indeed able to fill the last one before the end of the week, then we likely see a bullish move up to retest around this 4,450 level into July OPEX. Otherwise, if they're not able to fill that, we'd see more consolidation or even downside into the end of the week. Then we're likely going to be range bound between this 4,330-ish level to this 4,422 level into that July OPEX. For the most part, you can maybe see a day or 2 over or under both of these levels. However, we're likely going to stay and consolidate within this range into that July OPEX period. Again, if nothing big happens here within the next 2 days of this week. So keep that in mind. Also, something important for Friday, as you see with this blue vertical line here, I have a long-term reversal date. So this is actually based on the weekly chart. So whatever direction we close the week, there's a high likelihood that within the next week, we actually have a reversal to that opposite direction, similar to the 18-day trading cycle that I shared with you earlier in this video. But this one works more so on the weekly, and is data that works all the way back into the dot-com bubble that we had in the early 2000s. So a lot of data to back this one up. Watch the close for this week, depending on the direction, because eventually at some point next week, it doesn't have to be the start of the week, but at some point next week, we'll likely see a reversal to the opposite direction to close that week. So keep that in mind. Another thing I do want to talk about here is QQQ. We saw a break back above this neckline, this key demand zone right here, this purple, which was broken through based on Monday, but because of that 18-day cycle, we had bullish flows coming out of this because the S&P 500 was leading. Characteristically, tech had been leading previously, but because of that reversal date, we saw a large breakout in the S&P 500 as well as continuation upward in that reversal time period, and the Qs followed because it was able to get back above this purple zone here after falling under for just a little bit. This next level around this red zone is going to be key, especially if bulls are able to hold over, which right now, based on the close and after hours price action, there's a good potential we open above this tomorrow. If that is the case, there's more bullish bias heading into the end of the week for continuation upward. Equally with the NASDAQ, I'm watching to see see if this gap over here is filled. Remember what I said about SPX earlier in the video about this gap up here. If it's filled within this week, then we'll see another rush up to test the 4,450 level a little bit higher if it wants to. Also a tip with this level, the 4,450 to 4,500 range. So that's a 50-point range is one of the strongest levels that I have in the entire market. So this 50-point range up here, again, when it's tested, will act as a very strong resistance. We saw it over here already, and it actually was front ran by just 2 points over here before we reached the 4,450 level. But this range alone can be very, very difficult for bulls to be able to get above in just one run. So keep that in mind there. That also works in the inverse. If bulls were able to get it above the 4,450 to 4,500 range, this would act as an equally strong support. But at the moment, this is going to act as a key supply zone. So keep that in mind if we do end up reaching that. Again, if we're able to fill this gap here before end of the week, that shows bullish emphasis into that July UpX before bears can have another potential window of weakness to try and take this thing down. But right now, reversals across the table on both SPX as well as we just showed you here on NASDAQ, as long as we stay above this purple box here, and especially the red range that I have, which is roughly 364 to 364.60, then I can see some more upside price action. Something else I do want to talk about is the dark pools. We've actually seen fairly light prints as of this week. If you remember in previous weeks and now previous months at this rate, we've been seeing like well over 3 billion, 4 billion, even some $5 billion prints. And this week has actually been the lightest in a very long time. We had 1.2 billion in premium today at the 436.20 level. Tuesday over here, so you can see we actually had the most of the week so far, and that was just 2 billion in premium. 2 billion is still a decent amount, but nothing super eye-catching like we've seen in previous weeks. This was a lot lower at the 431.26 level. And then if you go back to Monday over here on the dark levels feature here on Cheddarflow, we had 1.4 billion in premium at the 433.21 level. So again, we're only in that mid 1 billion to 2 billion max level as of this week. So nothing too significant, at least that's caught my eye. And if we go over here to the last thing I want to talk about, that is the Dow Jones. We actually found support off this previous range, at least this support level here that I have, because this is a key range that's been a range for a very long time. If you remember from over here, this was a period of distribution before we fell down during the whole bank fiasco and then retested the downward trend line before bouncing back up. And this range has really retained price many times all the way back here in February, like I just said, over here in end of April, early May. And then as of recently, the last 2 or so weeks, price has been stuck within here again. So continue to watch this level down here, roughly 33,678, with the top one being 34,166, because if it breaks in a certain direction, you can have confirmation of that setup playing out. And also if you go over to the daily chart here, there's kind of mixed signals on the Dow, because just looking at this chart pattern, there's a potential inverse head and shoulders pattern off of a strong downward trend line bounce. So there's potential for upside, but the Dow has to get decisively above this 34,166 level, but gap down to start off last week and was unable to close back above. So bulls want to see a weekly close back above and ideally gap fill of this gap over here from 2 weeks ago in order to have continuation of the upside. Otherwise, they're going to be stuck within this range and attempt for another breakdown, which is done twice so far after being stuck in the range. So continue to watch the Dow, look for confirmation below or above this range, because that's going to be your best bet at a trade. Otherwise, my main watch for this week, like I said earlier, is SPX. A lot of future price action is going to be dependent on if this gap is filled by end of this week. Again, if it's able to fill all 3 gaps within the same week, at least the week after that these gaps were formed, that would negate a lot of the bearish momentum that we saw previously and hence leave a lot more upside room into that July UpX period. So I'm going to be watching for this. And other than that, as always, appreciate you guys watching this video, and I'll see you guys next time on Sunday.